Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best growth dividend stocks to buy right now. These stocks are going to be fundamental in your wealth building process, and I talk a lot about risk management and how you should have a good foundation to your stock portfolio, and the 10 companies that we're going to talk about today are that foundation. These companies are also going to be phenomenal picks in times of stock market uncertainty, such as an economic recession or even a stock market crash, because by using and utilizing some of these defensive stocks and these high dividend stocks, we are going to be able to lower our average cost basis for these companies during downtrends, and the growth of these companies are going to give our portfolio fantastic stock price appreciation over the long term. So these 10 companies could make a fantastic cornerstone or foundation to a growth portfolio, and many of these companies are increasing their dividend year over year, which is absolutely phenomenal. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below on your favorite growth dividend stock, subscribe if you are new, and without further ado, let's just jump right into today's stories. This list is in no particular order, but as we start going down this list, we are going to start with high growth companies with low dividends, and then we are going to end with a decent growth company with a relatively high dividend yield. So we're going to start off with the growth company, which is Apple Inc., ticker symbol AAPL, which has a dividend yield as of right now of 0.56%, and the AAPL share price trades for $171 per share, while professionals think at minimum the company is worth $136, and at maximum the company is going to be worth $220 per share. If you didn't know, Apple is a multinational tech company that is most known for selling iPhones, iPads, MacBooks, and their Apple ecosystem. Over the last 5 years, this particular stock has appreciated and gained around 319.9%, which is absolutely insane, and they have also remained a very stable growth company over the last couple of years. They have generated around $93 billion worth of free cash flow, and that allows them to not only keep growing, but hopefully increase their dividend in the future. The company maintains a 9-year track record of dividend growth, so for the past 9 years, they have raised their overall dividend yield, and they even issued a dividend during the recession of 2020, which means that this company is fantastic to buy, not only for the impressive growth and the okay dividend, but also because it's so stable that even during a stock market crash or a recession, this company is going to continuously pay you either by stock price appreciation or dividend growth. Right now, the company pays a quarterly dividend of around 23 cents per share, and Morgan Stanley recently increased their price target for Apple stock to around $180 per share. The next company on our list is Walmart, ticker symbol WMT, which has a dividend yield of 1.77%. Their share price currently trades for $137 per share, while experts in the industry think that the company is worth around $78 on the low end and $170 on the high end. Walmart, if you didn't know, is an American multinational retail corporation that owns a multitude of different department stores that also act as grocery stores throughout the country. Over the last 5 years, the stock has gained around 57.4%, which again is extremely impressive, particularly because this is a fantastic growth dividend stock or a dividend growth stock, depending on how you look at it. Their operating cash flows came in at around $24.1 billion, which is absolutely insane, and the company dished out around $1.5 billion worth of dividends just in the first quarter of 2022. Walmart has been known to grow their dividends continuously since 1974, to where now they pay a quarterly dividend of 56 cents per share, and of course as time goes on, they are consistently increasing that dividend. So remember, you're making money off of these companies in 3 ways. The first way is that the actual stock price of the company is appreciating, and that's going to be a fantastic way to increase your overall wealth, because right now the stock price is worth $137, while Deutsche Bank thinks that the price target should be around $142, while other more bullish analysts think that it could surge to $170 over the next 12 months. So that's one way that you're going to get money from the company. The next way you're going to get money from these companies on this list is because the dividend and the passive income that they are going to be paying you quarterly or annually or even biannually. And that's going to generate you some passive income, especially if you decide to reinvest these dividends back into the company by using drip investing. Go ahead and research drip investing to see if your personal brokerage or platform offers drip investing for your investments, I would highly recommend that you turn that on. And then lastly, you're going to make money from this company by these various companies increasing their dividend yields year over year. So not only are you going to be receiving dividends, but the dividends you receive next year are going to be even higher. So their dividends are going to start to appreciate, and you can capitalize on this by making even a greater compounding effect by reinvesting these dividends back into the company to where your next dividend is even greater. The next company we're going to talk about is Lowe's Company Inc., ticker symbol LOW, and I think a good substitute for Lowe's, if you don't like Lowe's, check out Home Depot, ticker symbol HD. Lowe's currently offers a dividend yield of 2.11%, with the current share price trading at $212 per share. While analysts believe on the low end the company's worth $200, and on the high end the company could reach $300 over the next 12 months. This company is a North Carolina-based retail company that specializes in home improvement. Just in the first quarter of 2022, the company generated a staggering $2.6 billion worth of free cash flow, and they paid out around $537 million worth of dividends in that same quarter. Back on the 27th of May, Lowe's also increased and hiked their dividend by around 31%, where the company is going to generate you a quarterly dividend of around $1.05 per share. Also, to add fuel to the flame, the company has also raised its dividend consistently over the last 25 years, and this is why Wells Fargo has a price target for this company of $220. So again, you can be making money from this stock in 3 different ways, or even potentially 4 ways if you decide to reinvest your dividends through drip investing. The next company we're going to talk about is Sysco Corporation, ticker symbol SYY. This company currently has a share price of around $86, while stock professionals think at minimum the company's worth $83, and at maximum the company could be worth $100 per share. This company specializes in the marketing and distribution of food products, and they are an American multinational wholesale company which is more than equipped to give investors fantastic yields. Their dividend yield currently comes in at 2.27%, and they pay their investors a quarterly dividend of 49 cents per share, which means that they have increased their dividend by around 4.3% as of April. The company also has been increasing their dividend yield pretty consecutively since 1976, and this is why a Barclays analyst actually has determined that Sysco Corporation is one of the best defensive stocks to buy right now, and that they have a price target of $102, and that's actually an increase for the price target from Barclays. Next, we have Starbucks Corporation, ticker symbol SBUX, which has a dividend yield of 2.29%, while the share price trades at $87 per share, and stock experts believe that the company is worth anywhere between $64 and $136 over the next year. This company is an American multinational chain of coffee shops who originally initiated their dividend policy back in 2010 to where now they pay their investors a dividend of 49 cents per share. JP Morgan also raised their price target recently on Starbucks Corporation up to $92 per share, so that is absolutely phenomenal to see. So now we're going to start breaking into the top 5 of this top 10 list, and again, these are not in any particular order. I like all of these companies, and coming in at number 5 is Pepsi, ticker symbol PEP. Now, a good substitute for Pepsi, in my opinion, would be Coca-Cola, ticker symbol KO, but I talk about that company a lot in other videos because they have a fantastic dividend yield, while Pepsi has a dividend yield of 2.64% and a current share price of $179. Now, I think that Pepsi is a phenomenal company that could surge up to $200 per share. However, there is the chance that the company could fall down to $160 per share according to current forecasts. This is a multinational beverage company that manufactures, markets, and distributes its various beverage products. This is one of the strongest dividend growth companies that has a staggeringly impressive dividend growth history. They have raised their overall dividend payout for the last 49 years in a row to where they offer their investors a dividend of $1.15 per share, which is absolutely amazing. So if you want passive income and growth, this could be the company for you. But again, always make sure to do your own research on these companies. Even though I love these companies and I think all 10 of these companies could make a very strong foundation to a portfolio, before you start to invest into more risky companies like technology growth companies such as Palantir Technologies and SoFi Technologies, companies like these who are blue chip companies that have great growth and great dividends should definitely make up a strong foundation in the majority of your portfolio, in my personal opinion. But always make sure to do your own research and make sure these companies align with your investing strategy and your risk management policies. But again, I think all of these companies should be in literally almost everyone's portfolio depending on their investing strategy. And this is one of the reasons why Morgan Stanley increased their overall price target for the PEP stock to $198 per share, almost that $200 price target where I think the company is headed. Next, we have another defensive company, like the majority of companies on this list, which are going to be made of consumer staples as well as healthcare companies or pharmaceutical companies, which would include Bristol-Myers Squibb, ticker symbol BMY, which has a dividend yield right now of 3%. The current share price trades for $75 per share, while stock professionals think that the company could be worth $92 by the end of the year or $61 by the end of the year, depending on how the macroeconomic environment reacts to the latest inflation numbers, job numbers, and whether or not the Federal Reserve or how aggressively the Fed will increase the overall interest rates. Bristol-Myers Squibb, ticker symbol BMY, is a New York-based multinational pharmaceutical company that has delivered 271.3% worth of returns to their shareholders over the last 5 years, which again is absolutely phenomenal. This company pays a quarterly dividend of 54 cents per share, and the company has consistently and constantly increased and raised their dividend for the past 16 years, and I anticipate that that trajectory will increase as time goes on. This is one of the many reasons why JP Morgan has increased their overall price prediction for Bristol-Myers Squibb to a price target of $85 per share. Now we're going to break into the top three. Now I actually have a red X next to the next two companies, which means that I think they are good companies. However, right now I don't personally own them. I am waiting for a pullback in these particular stocks. And the first company we're going to talk about out of the top three is Extra Space Storage Inc., ticker symbol EXR, which offers a dividend yield of 3.04% and a share price of $212 as of this video. Now I do want to mention that this stock price could crash down to around $156 or lower, or surge all the way up to $248. However, I think it's going to actually pull back due to the macroeconomic environment that we are finding ourselves in. And if you didn't know, this company is a Utah-based real estate investment trust that mainly invests into self-storage units. And ever since its IPO back in 2004, the stock price has gained 477%. The company has also increased their quarterly dividend by 20% to where now it gives their investors a $1.50 dividend payout per share. And this is going to be the company's 12th year in a row of their fantastic dividend growth. And this is one of the reasons why JP Morgan increased and upgraded and raised their price target and price prediction for this company up to $193. Next, in our top two spots, we have the Clorox company, ticker symbol CLX. And again, I personally do not own this company in my portfolio right now because I am anticipating a pullback for this particular company. Right now, the stock price is worth around $148 per share, and stock experts and professionals think that the company could be worth anywhere between $101 and $165. The company also has a very good dividend yield of around 3.4%. And if you're not familiar with Clorox, this is an American manufacturing company of a plethora of various types of cleaning products and many other things. They have been very stable in terms of their overall dividend increases for the last 50 years in a row consecutively, to where the company pays out a quarterly dividend of $1.18 per share to their shareholders, investors, and stockholders. This is another reason why Credit Suisse actually has a price target for the Clorox company that goes as high as $130, and that's a reason why I think the stock price is going to pull back, because their current stock price of $148 is rather high, and I think that the $130 price target is much more achievable for this particular company. Then lastly, in our number one spot, we have 3M company, ticker symbol MMM, which gives their investors a dividend yield of 4.04%, while the company trades at $143 per share. Experts in this particular industry dictate, forecast, project, and analyze the various financials and fundamentals of this company to have price targets that range anywhere between $118 on the low end to $210 on the maximum high end. 3M is a Minnesota-based multinational multinational manufacturing corporation company that makes a plethora of various products. But what we want to focus on is the growth and the dividend of this particular company. They pay out a quarterly dividend of $1.49 per share. And to make things even better, this company has a history of increasing their dividend for the last 64 years consecutively in a row, every year, every time. And that's an amazing track record, which makes this one of the best growth dividend stocks to buy right now. So I would love to hear your thoughts on these companies on this list. Remember to do your own research on these companies. However, I still think that all of these companies, particularly buying all 10 of these companies, is going to make up a great foundation or cornerstone for your portfolio, and it's going to cause your portfolio to stabilize and prevent you from losing money during a stock market crash, and it's also going to get you through various economic recessions while on top of giving you fantastic growth during bull runs and market runs. So I would love to hear your thoughts down below. Remember to go and smash that like button for more videos just like this one. Subscribe if you are new, please, and I will see you in the next YT video.